Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here in studio at the Stock Exchange. Well, stocks are set to wrap up a choppy yet positive week and month. It's the final trading session of January, and so far this month, the Dow Jones Industrial Average leads the way up 5.5% as the S&P 500 is higher by 3.2%. Corporate earnings and economic data remain in focus. And on the earnings front, Apple reported results last night with shares rising at nearly 3% in extended trading. The tech giant is seen as a bellwether and exceeded analyst expectations. We'll have more on the economic data front in just a moment, but let's take a look at what is on tap in today's show. After 4 of the 7 magnificent 7 stocks reported earnings this week, top analyst Angelo Zeno will join me for his takeaways on the results. Plus, HumanX, dubbed the leading artificial intelligence conference, takes place in March, and its CEO will be in the studio shortly for more on what we need to know in this space. Well, last night, music's biggest acts raised money for Los Angeles wildfire relief, and we'll tell you more about the pop stars, first responders, and rock stars who came together for fire aid. Well, for the moment, let's turn to that economic data out this morning. The Fed's preferred inflation measure, of course, hitting the tape at 8:30 a.m. Eastern. And here are the numbers. That headline inflation number rising 2.6% from the same time a year ago. That was in line with expectations. On a month-over-month basis, it was up 0.3%, also in line with estimates. Now, you strip away those volatile food and energy categories. That's the core number. That was up 2.8%. On an annual basis and 0.2% on a monthly basis. All metrics across the board, 4 of those in line with expectations. And in the wake of that, data as expected, no major surprises here, we do see stocks continuing to hold to gains in the pre-market with fractional gains across the board. Well, joining me now with more is Thomas Hoenig. He's a former Kansas City Fed President. Thomas, thank you so much for joining, of course, on a very important day and a very important week. What do you make of the inflation data out this morning?
Well, it's obvious that it is within expectations, which is higher than their target by quite a bit, with the total and the core both 2.6 and 2.8. That's, you would say it's within expectations, but it's certainly above the target. And I would tell you, I make a couple points. More than a couple points. Number one, the economy is strong coming out of 2024, and it's strong going into 2025, and that should continue. And with that, the federal funds rate, the Fed's policy rate, which is 4.25% with inflation at 2.5% or so, it means real rates are below 2%. And that's actually closer to neutral, or what they call the equilibrium level, for steady state inflation of 2.5. So in that environment, you would not expect inflation coming down very quickly, and the Fed's projections suggest that. And that means inflation staying above target through this year. And that leads me to my fourth point, and that is the Fed's balance sheet. They continue to do quantitative tightening. That is, they're reducing the size of the balance sheet, they're taking liquidity out of the market. And that means that over time, as the debt of the United States continues to grow with its large deficit and $36 trillion of debt, that means there should be upward pressure on interest rates across the yield curve. And that's where I think the real test will come as far as what the Fed does, whether it tries to begin buying that debt because there's pressure. That's when I think things are less certain as you get past the mid-year of 2025.
So let's talk about takeaways from the Fed decision this week as well. Of course, the Fed, as expected, keeping rates unchanged at their current level, citing that inflation is sticky and that the economy, the jobs market is solid. Well, next week, of course, we'll hear on jobs. But what did that statement from the Fed and comments from the Fed chair indicate about the path forward for rates?
Well, I think it's saying pretty much we're not moving down anytime soon. He keeps saying, we're in a good spot. This is where he thinks the rates are still modestly restrictive, I should say, and he expects the inflation to come down, but very slowly. And that means we're going to stay where we are until we actually see the inflation numbers come down. And I think that's probably right, but I think his other challenge, as I mentioned, is what are they going to do with their balance sheet? But that's the policy that they're following, and I think they'll stick to it through a good part of the first part of the year.
So with a solid economy expected, certainly fueled by the jobs market, what does sticky inflation mean for consumer spending, knowing that consumer spending is the vast majority of overall GDP growth?
Well, I think the consumer is fairly confident right now. They are still upset about high prices, but they're adjusting to it. There'll be a lot of pressure on wage demands because we have a low unemployment rate and they're trying to catch up with this high inflation. That is a factor going forward, but I think the consumer in the meantime will continue to spend. They're a big part of the economy. In fact, they're the dominant part of the economy. And that's very important because investment with the GDP in the fourth quarter seems to have slowed down a little bit. That puts more demand on the consumer to keep this economy strong as we move forward. Now, hopefully investment will pick up this first quarter, but we'll have to wait and see. But the consumer will be a major part of the growth of the economy.
We've seen the stock market, Thomas, of course, respond to a new administration. We're just a few weeks in, settling in, I think, as you will, if you look at the stock market gains that we see over the course of this first month of January set to wrap today. What about this new administration and its potential policies could impact the economy and how?
Well, I think the administration has I think the Congress administration has a huge challenge, and that is the United States debt is growing at almost $2 trillion a year. That puts great demands on borrowing dollars from the private sector, and that is a huge problem relative to the interest rates, long-term interest rates going forward, as we've already seen. As the Fed has reduced the Fed funds rate, its short-term rate, by 100 basis points, the long-term rates have increased 100. And that's because the market knows that we have this huge debt to refinance and this new debt coming on. And that will be the challenge, I think, for the Congress administration. And they have a huge problem because a big part of that debt their spending is mandatory. And here's part of the issue. Spending is about 25% of GDP and revenues are about 17 to 18% of GDP. That means the deficit grows. And how are you going to do that and still control your interest rate environment going forward, given the demand for U.S. Treasury debt?
So it sounds like, Thomas, the way that it would probably impact consumers most is via those borrowing costs.
I think so, and you see that. You see it in the borrowing costs right now, both for business and for consumers have been high, and they're going to stay high. And that is a real pressure on the consumer and a big pressure on investment in the United States. That's why the debt has to be addressed as a number one priority for the United States.
Thomas Hoenig, former Kansas City Fed President. Thomas, thank you for joining.
Thanks for having me.
All right, well, stay with us because up next, Apple shares jumped in extended trading after Thursday's earnings report, and an industry expert will join me to tell us what sparked this rally up next.
So Brightwave is an investment research platform that uses artificial intelligence to help asset managers understand more about the markets than is humanly possible.
And what would you say that makes you unique, though, from others who are currently on the market?
A number of things. So we have an incredible engineering team. So for myself, I established and led the language model engineering practice at Databricks. Created the first language model to demonstrate that open source technologies could exhibit the kinds of behaviors we've come to expect from ChatGPT. My co-founder is the former CTO of a federally regulated derivatives exchange and clearinghouse. It is.
Yeah, it's really amazing.
And his first deep learning patent was filed in 2018. We've got engineers from Meta and Instagram, award-winning research engineers, commercial team from UBS and McKinsey and Goldman Sachs. It's a stacked bench,
yes.
And it has allowed us to execute on very, very difficult technical problems. If you think about the number of factors that are relevant to an investment decision, it exceeds the limits of a person's ability to keep it in mind simultaneously. And we see an opportunity with language models to create a technology that allows a person to connect the dots across millions of documents and see a story that nobody else has noticed in order to identify a mispriced asset.
And you decided to come to Money 2020 this year because you had a major announcement about your Series A funding.
That's right.
Yeah.
We have announced a $15 million Series A, preempted by Decibel Partners, one of our seed stage investors, and including participation from Omers Ventures. We're extremely excited about this. This brings our total funding in the past 17 months to $21 million. We've quadrupled our revenue since our Series Seed announcement in June or July, forget exactly when. And it's happened quickly. We've seen vigorous traction, brisk demand from across financial services.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio at the Stock Exchange. Well, tech earnings were a hot topic on Wall Street this week, with those magnificent 7 companies like Apple, Tesla, Meta, and Microsoft reporting these past few days. The action doesn't stop there, as Alphabet and Amazon are on deck with their results next week. Joining me now with more is Angelo Zeno. He's VP and Senior Equity Analyst at CFRA Research. Angelo, it's great to see you. And let's start with Apple, because that company reporting after the close yesterday, better than expected results. What were the takeaways?
Yeah, so thanks for having me, Kristen. I think overall, when you kind of think about Apple, better than expected in terms of the top and bottom line. The guidance was actually surprisingly good. And the reason I say surprisingly good is this is a company that typically is very conservative on the guidance side of things. And instead, they essentially kind of guided where we were already kind of looking for them to guide. And really, it's the fact that they're executing extremely well on the services side of things. Services grew about 14% in the December quarter. Street was looking at 12%. That's helping to support a higher than expected margin profile and, of course, free cash flow. And that's kind of the name of the game when it comes to Apple. So as long as they can kind of execute on that side of things, we think the Apple story continues to work. The fear going into the numbers was, of course, China. China was abysmal. It declined 11%. It caused iPhone sales to actually decline when the street was looking for slight growth here in the quarter. That was kind of the one kind of gray area for the company. But again, as far as the guidance is concerned, it looks like China declines probably start to maybe aren't as bad as what we saw in the December quarter due to a subsidy program that was implemented in China. And the fact that kind of Apple Intelligence looks like it's doing well in the markets it has launched already is definitely a good sign out there, I think, for investors.
Certainly, we see Apple shares up 4% in the pre-market action. Angelo, we're just about 15 minutes away from that market open. I'm glad that you mentioned China, because that had been a focal point that we had learned about heading into this particular report. China also in focus specifically on the artificial intelligence angle that we saw at the start of the week. How should a tech company like Apple navigate that?
Well, it's interesting because Apple specifically, we think, is a net beneficiary of kind of some of the DeepSeek news that we've seen out there. You kind of look at, and really kind of DeepSeek does open up a whole can of worms out there and implications. But really kind of maybe the main takeaway is the fact that, hey, listen, there's going to be a lot more large language models that kind of enter the market here over the next couple of months, a lot coming from China. We just saw kind of Alibaba also launch their own kind of large language model as well. You're going to see more and more of these, and what that will hopefully do is help kind of commoditize the large language model market. I think the bulls out there will kind of hang their hat on saying, all right, well, we've got kind of lower options in terms of AI, make AI cheaper, and that kind of will help adoption and spur more demand on the enterprise side of things and what have you. For Apple specifically, they've kind of shied away from spending tens of billions of dollars in kind of developing their own models. Unlike some of those other cloud players out there. And as a result, they should be a net beneficiary, because as those costs come down, they're going to be able to hopefully kind of find ways to monetize AI, whether it be through higher hardware pricing or new services out there. And it's going to be leveraged on kind of a lower cost profile on the kind of large language model side of things.
Angelo, I want to stick with the good news here, because Meta is probably the biggest blockbuster that we see from this week. That stock up almost 1% pre-market, touched a new all-time intraday high yesterday on the back of its results. Is Meta the bellwether now when it comes to this Magnificent Seven space?
You know what? That's a great question. And when I look at Meta, I personally underestimated the story. We've had a buy recommendation on this stock for the last couple of years, but to be honest with you, we kind of viewed it as almost kind of this one-trick pony out there, and the fact that they've been largely leveraged to the digital ad space. But when you kind of look at what they've got in the pipeline here, you've got to be extremely positive about this company, and not necessarily just in 2025, but going into 2026 and 2027 on the AI front of things. I mean, clearly AI is helping them in terms of creating better kind of rankings, recommendations, content out there. But when you kind of think about Llama out there, you actually look at the DeepSeek news this week. The open source model approach is, we think, the right approach in kind of an AI-driven world. And Meta was the only one of the Mag 7 that actually took that approach. You kind of also look at what they've done in terms of some of the tools they've provided out there with advertisers in terms of Ad Advantage Plus. That's now at a north of a $20 billion run rate. Even some non-AI offerings out there, whether you kind of look at something like Threads, which is now testing ads, potential monetization into 2026 and beyond. Who knows what happens with TikTok here, but right now, with TikTok in limbo to an extent, Meta is a beneficiary. And then maybe the last comment I'll throw out there, Meta AI is turning into a beast right now, north of 700 million users. And we think there is a lot of monetization potential attached to that as well going into the next couple of years.
So, Angelo, we have probably about a minute or so left. And what I want to ask is about Microsoft as well, and what we can glean from the Mag 7 results this week, Microsoft and Meta in particular, in terms of what it means for NVIDIA as this AI arms race heats up.
Yeah, I mean, listen, I think as far as kind of, on Microsoft's side of things, cloud spend continues to remain very healthy. Microsoft was hit a bit because it remains somewhat capacity constrained on their end of things. That is expected to be more normalized as we kind of hit the middle of this year. But as far as kind of maybe tying the NVIDIA story here with Microsoft, Meta, as well as the other hyperscalers out there, these companies will continue to aggressively invest in our view. But that said, we do expect spending to start to moderate. And that could potentially be a thorn for NVIDIA, but not necessarily, because where we think some of that spending starts to ease is more on kind of the infrastructure build for data centers. We think the compute side of things will continue to see strong spending, and that should continue to benefit NVIDIA, albeit at slower growth rates out there. But overall, the broader kind of landscape out there for tech, we think looks very positive, and that kind of longer theme for AI as well.
We've heard those echoes elsewhere on the show too. Angelo Zeno, so great to have you today. Thank you for joining. Angelo's VP and Senior Equity Analyst at CFRA Research. All right, well, coming up, an upcoming event in Las Vegas is dubbing itself the most important AI conference of the year, and its CEO will join us up next to tell us more.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Artificial intelligence has been the star of several high-profile events already this year, from the Consumer Electronics Show in Las Vegas to the World Economic Forum in Davos, Switzerland. And in March, an event calling itself the most important AI conference of the year will take place in Las Vegas. Joining me now with more, Stefan Weitz. He's the CEO of HumanX. Stefan, welcome.
Thanks so much for having me. And you said it, so it's actually true.
It is indeed true. Artificial intelligence could not be hotter. What do our viewers need to know about this event?
This event's a little different than a lot of the other ones. This is focused on business leaders who have to figure out how to use AI in their organization. So we've got a few thousand of them coming. We have 300 of the world's best AI thinkers, speakers, builders on stage to help impart that knowledge. And plenty of places for these business leaders who run functional units, run parts of large companies, can come together, meet each other, meet vendors, find solutions, get smart. So it really is designed to help people figure out their path and figure out how they're going to get there.
Who are some of the experts that you're interested in hearing from?
Oh my gosh, we have 300. And so, for example, Sridhar, CEO of Snowflake, will be there. Kevin Wiles, CPO of OpenAI. Who else? Mike Krieger, CPO of Anthropic, is there. May Habib, CEO of Writer. I mean, there's really, practically at this point, anyone who is very important in AI is going to be on stage.
And probably more relevant than ever based on what we continue to see in this space, including the news that was out earlier this week. So when it comes to artificial intelligence, what are the cutting edge trends that'll be covered?
At the event? Well, certainly we'll talk about agents. Everyone loves agents.
Yep.
So we'll have a lot of that. We'll talk infrastructure, which is an important piece, especially as companies try to figure out how to deploy this and how to use it without bankrupting the company. That's going to be critical. And then cybersecurity is a huge one as well, because as we've seen already, we're seeing AI clusters spin up that can really spoof very convincingly a lot of different things. So ensuring that you have cyber in place is very important. So really, it runs the gamut. The full agenda is on the site right now, but really anybody, again, who is in an organization, has responsibility for AI, like this is the place you got to be.
How crucial do you think AI is right now?
To what? To the world? To
the future of business,
Without being hyperbolic, it's probably the most important thing in my lifetime that I've seen. Internet was amazing, obviously. Transformed the whole planet. Mobile networks were incredible as well. But the speed with which AI is advancing and the ability for smaller companies to actually build really interesting products and applications on top of open models, for example, we're just the beginning of seeing what this will do for business. But it is unquestionably something that if you're not on top of, you will be left behind.
Does DeepSeek change the game? And I asked that based on the news that we got on Monday.
Right. No, I mean, I think open models have been around for a while. Llama's been around for a while, and the reality is what that's doing is it's going to allow people to push AI more to the edge. So rather, today you've got these proprietary models, they're kind of locked in these data centers. You're able to take this DeepSeek thing, put it on the edge, and what that can do is create whole new applications where AI is living in your earpiece or in your glasses or in your toaster, because we all need AI toasters. And so that's what's exciting about it, is it really, A, it's cheaper, of course, to develop against in some cases, and B, you can customize it to whatever you want and however you want to deploy.
What is an AI toaster? How is AI at work in toaster format?
I mean, can you imagine? It'll be like a therapist. You can talk about it. I shouldn't eat this toast. I'm getting kind of fat. You can respond back to you in a nice way. I have a toaster which has a screen on it that you select how brown you want it. I'm like, why did I buy this? But because I'm a nerd, that's what I do. Yeah, we'll see.
We're just a few weeks into the new administration, and I'm interested to learn from you how you think this new administration will embrace artificial intelligence.
Well, I mean, luckily, you've got Elon doing a lot of work there, so that's impressive. David Sachs, of course, is AI Czar coming in. Sriram, I think, also will be sworn in there to help with that. So you've got really good, smart thinkers in the space, which is exciting to see. We had Biden's EO, which had good parts and bad parts. That was rescinded, obviously, as Trump came in. I don't think we've seen a kind of a replacement for that yet, which is fine. We're a little early in the game. But I think he understands, the administration understands, that this is critical for American power to a large extent. And I think it's very clear when you see things like DeepSeek, it was a wake-up call for our country, frankly, as well, to ensure that we make the right investments while still being responsible with developing AI. Because it can and will go out of control if we don't. So.
How is the technology that you're seeing in this space, in AI, in the US compared to the rest of the world?
We still have, that's hard to say. If you look at, again, China, DeepSeek's one thing, then you have the O1 model from Kai-Fu Lee, which is an incredible model as well. So you've got really good models out of China. Europe is also building out some incredible models as well with H and Mistral. So it's not evenly distributed yet. You still have a center of power probably in the US, but China certainly is an incredible power, and as is Europe. So sure, we probably have maybe more of the foundational things, but at the end of the day, these other countries will catch up very quickly.
The week of March 10th, that's when the conference is happening?
That is correct, March 10th through 12th, come to Vegas.
Anyone and everyone should go?
If your job involves AI and you're not there, I worry for your job.
All right, Stefan White, CEO of HumanX, delivering us what we need to know this morning. Stefan, thank you.
You bet, thanks.
All right, well, stay with us because up next we will have the opening bell. How has this partnership propelled Snowflake's growth and deepened its ties to the broader financial and technology communities?
Well, you know this. The New York Stock Exchange is the most storied stock exchange ever on the planet, and we're thrilled and honored to be on it. But there's also a very deep collaboration between the firms. It's at the level of us being the data platform for ICE and for the New York Stock Exchange, and being an important distribution mechanism for all of the amazing data that the NYSE wants to share with its customers and partners. We get a lot of great feedback about where Snowflake should evolve from Lynn and her team. And things like the tree lighting and the judging or the icing on the cake that demonstrate how closely the companies work with each other to partner, but just as importantly, create success for all of our giant customers. It's a deep partnership that I'm very, very grateful for. I tell people that AI is already magical because these language models can do things like understand fluid language, like the language you and I are speaking, and make sense of it, extract context from it, and do that effortlessly. We knew that how people are going to consume information was going to be changed forever. Just like, back when the first smartphones came, most people in the world kind of simultaneously realized that there was a before and an after, that everybody was going to have these amazing devices with them. I think we're going to think about AI the same.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, in just a moment, Brazil's biggest sanitation company and NYSE-listed firm Sabesp will ring the opening bell to celebrate a major moment. The company completed its privatization process in July as the São Paulo state government reduced its stake in the company from just over 50% to about 18%. It's seen as a crucial moment in the country's water and sanitation sector, aiming to up investments and improve service coverage across Brazil. Well, as one of the biggest sanitation companies in the world, Sabesp supplies 29 million people with water and 25 million people with sewage collection daily. The Sao Paulo state governor is going to do the honors this morning on that Bell podium. which we'll be showing you, and he will be accompanied by the company's new management team as they commemorate the moment. Let's take a look at the opening bell. All right, we are officially off to the races here at the New York Stock Exchange. You saw the crowd, you hear the cheering behind me, and it is the final trading day, in fact, of January and the week. We do see the Dow leading the way, up more than 5%, close to 6% on the month, and higher on the week, too. Well, joining me now with more is Larry Tantarelli. He's Chief Technical Strategist for the Blue Chip Daily Trend Report. Larry, it's great to have you on the show, and I want to hear from you how these technicals look in the market.
Good morning, Kristen. Great to see you. So the technicals look very good. The S&P 500 and the NASDAQ 100 are in confirmed weekly uptrends. Charts are very strong. They're over all the moving averages. And on the S&P, I think we're only about 1% or so, not too far from new all-time highs. The technicals look very good.
The technicals look very good, and so what we could expect from here, traditionally February can be a more volatile month. Larry, is that something our viewers should anticipate?
Possibly. We're coming out of an earnings period which is very strong so far. The mega caps have been putting up good earnings. The big banks and brokers have been putting up good earnings, and we did get a break this month from the core CPI. So bond yields have come down about 30 basis points. So February seasonality, I'm not sure if it's something that's going to come up or not, but the trends overall are pretty strong.
Top-ranked sectors I see here are technology, Larry, and 4 of these 7 Magnificent 7 companies actually reporting earnings this week. Apple higher this morning, Meta at a new all-time high. What is the strength that you see in the chart patterns when it comes to tech names?
So Meta just broke out to new highs, as you said. Earnings have come in pretty well. Microsoft is the only one that pulled back a bit, but overall, the market has responded favorably to the tech earnings. Charts are set up well, and it was really good to see Apple move higher because their China sales were down quite a bit, but the market really seemed to pass by that, and the stock is trading up, so that's bullish.
Certainly Apple feeling the boost today. Meta also higher in today's action, again touching an all-time intraday high yesterday. Is Meta the standout that you see going forward in technology?
It really is right now. They put up very strong numbers. They beat on sales. They beat on earnings. They are all in on AI. Mark Zuckerberg started to really focus on AI maybe 18 months ago. It's really paying off, but I will say not only is Meta very strong, but the Amazon chart is set up very well. The Google chart is set up very well. Alphabet, they've got earnings next week. But technically, Meta is the leader right now, yes.
I do want to ask you about the artificial intelligence space because most of our viewers probably follow it with the stock named NVIDIA. But of course, this week there was a bit of a knee-jerk reaction on that DeepSeek news. Larry, how has that played out in the charts and what do they show to you?
So DeepSeek is something that we need to pay attention to. And what happened is the semiconductor stocks pulled back sharply. NVIDIA pulled back sharply. And NVIDIA has been under some pressure because the DeepSeek open source model could create some challenges for NVIDIA's business model. But there have been beneficiaries in software. We've seen the cybersecurity stocks start to break out. Software stocks have been very strong. So DeepSeek didn't really put a pullback in all of tech, but money did rotate from semis into software. So I think it does open up some good opportunities.
You know, one of the key takeaways this week, in addition to the technology results, and of course what we've been learning about artificial intelligence, was the Fed's latest rate decision. Everyone expected them to keep rates steady. They did, but we did hear from the Fed chair in the press conference following that decision, as we usually do. What are your takeaways?
So the Fed's in a good position right now. They've cut a few times. Inflation has been sticky, but it has been moderating. Core CPI did come down month over month. The jobs market is very strong. Payrolls are very strong. So I think the Fed can really afford to sit and wait. They've got inflation moderating. Jobs are very strong. And I don't think they really have to be in a hurry to do anything. But I also think that's a positive for the markets, that we don't really have to worry about a rate hike right now.
So from a chart perspective, as you mentioned, no rate hike certainly could prevent any sort of sell-off, but can the market continue to rise, Larry, if rates stay steady?
I think the market definitely can, as long as bond yields stay where they're at right now. So the 10-year Treasury trades right around 455 or so. It had a big breakout to 480 before CPI. So as long as the 10-year stays in this 450, 460 neighborhood, I think the markets can digest that just fine. If for some reason there was a big breakout in the jobs number, if there was a big breakout in inflation, if 10-year treasuries go over 480, I think that would create some technical headwinds, but it's okay right now.
Larry Tantarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Larry, thank you.
Thank you.
All right, well, stay with us, because up next on NYSE TV Live, Tori Dunlap, founder and CEO of her first 100K, is going to join me to explain why women aren't investing at the same rates as men and what they can do to avoid losing money. Stay with us.
Orbit is a space logistic company. Actually, we have been the first space logistic company in the world, a pioneer. What does it mean? Space logistics for us means taking care of customer assets in space, so satellites.
But what you're describing, it can't be easy. So talk to me more about how you go about optimizing in-orbit services while also reducing costs for your clients.
You can consider the launch vehicle, the rocket, as a bus, leaving each passenger at the terminus. Our satellite, our orbital transfer vehicle, that's the technical name, is released at the terminus together with other passenger. But our satellite has on board third-party passengers, small satellites on behalf of other companies. And if the rocket is a bus, we are Uber, taking each passenger to their respective home, which is the target orbit. They could do that on their own, which with traditional methods takes 6 to 10 months, thus wasting 1/3 on 1/4 of their operational life. We can do that in much lower time. So the result for the end user is getting to revenues earlier and extending the operational life of their asset.
There has been increasing demand when it comes to the utilization of space-based technologies. Talk to me about how D-Orbit is positioning itself from a business standpoint to keep up with the growing demand.
Besides the traditional standard services, we now see a big demand for something new, which is cloud computing in orbit. The quick, immediate need of
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio at the Stock Exchange. Well, with the new year underway, January set to wrap, and tax season pretty much here, personal finances are top of mind for many Americans. One expert saved over $100,000 by investing and is on a mission to help Gen Z and millennial women try to do the same. Joining me now with more is Tori Dunlap, founder and CEO of her first 100K. Tori, thank you so much for joining.
Thank you for having me. Always a pleasure to be back.
It's great to have you. And of course, the new year is a perfect time to reset, create some goals, and achieve them when it comes to finances. What's your advice?
Yeah, I mean, new year, new you, right? That's always the energy as we come into a new year. But I really want people to focus on taking those small steps. It's very easy to even get started in the year and then realize, okay, we're almost a month in and feel overwhelmed and then just ditch your goals. We want to make small steps to get there step by step.
How do you do it? How did you get to your first 100K?
Yeah, it was a combination of different things. I was lucky enough to graduate debt-free from college, and it was a part of me saving and me working jobs on campus, but also parents who had saved a little bit. So I always like to acknowledge that. But yeah, it was making sure I negotiated my salary every single time I switched jobs. It was saving a portion of my income with every paycheck. Her first 100K, which is now a multi-7-figure global business, was the side hustle at that time. So I had my primary source of income, and then I was making money on the side. And then lastly, I was investing. So I opened up my Roth IRA when I was 22, tried to max that out every year. And so my 100K was 5 years ago now, which is hard to believe. But we're on a mission to help women all over the world save their first 100K too.
Good for you. So for women who need to get there, who want to get there,
yeah.
I know you mentioned step by step. In this environment, what are maybe some of the first steps to take?
Yeah, that first step is just understanding where your money is and what's going on. I think a lot of people overlook it because they're in what we call ostrich mode. They've buried their head in the sand, they act like their money doesn't exist, and they're just kind of going through life being like, okay, I'm gonna figure it out. But we need to understand what our money's doing, where it is, where it's coming in, where it's going out in order to make a plan. So that's the first thing. Second thing is automate your savings. Set aside an automatic transfer from your checking account to your savings account. It's going to grow without you having to think about it, rather than you getting to the end of the month to start saving and then there's nothing left to save. And then finally, that third thing, especially for women, we're so focused often on just saving money, and that's great, but we have to take it a step further and actually start investing. We need our money to work as hard for us as possible. So don't be intimidated by everything going on back here. Don't feel like, oh, it's just a man's game. Like, I need you to be an active participant by investing.
And what have you seen, Tori, based on your research and your own personal experience in terms of how investing can perhaps get you to your goals quicker or save more money over time?
I mean, I don't think I would have hit my first 100K as quickly as I did had I not invested. And we're seeing, in our community, thousands and thousands of women start investing. We actually started a program called Stock Market School, where it's not only teaching you how to invest, but it's making women those active participants. And so we've seen women in our community invest more than $80 million. And that's all because they were brave enough to take that first step. So 80% of the women in our community had never invested before. And so we're trying to make a space that feels less intimidating. And when you have money, you have options, right? So when you're able to invest and grow your money, you're able to protect yourself in retirement. We know that women are more likely to end up in poverty after retirement because they don't have as much money. You're more likely to, of course, be able to, save for your family and take care of them. But also, money is your best form of protest in a society and a system that constantly disenfranchises you. So having money means having those options.
Having those options indeed. And let's talk about tax season, because that's going to be here, right? And that definitely does take planning.
It really does.
How would you approach that?
Yeah, I mean, tax season every year, I'm no different than any Americans, where I get a little nauseous and I'm like, okay, we're doing this again. I think the focus is to be as organized as possible, but especially if we can be organized prior to tax season, right? If we can set up some systems in place. I'm a business owner, so my taxes are very complicated. And so making sure that you have those resources at your disposal, like hire an accountant. They're never, they're a great source of making sure that it's done properly. They're never a waste of money. And then also making sure that, you have all of your ducks in a row, you have all your documentation. It's going to make it a lot easier.
Are there certain programs that you have found help you achieve the organization that we all desire?
I think one of those is, if you are a business owner, like, it sounds so simple, but open up a business credit card, because every business expense then goes on that credit card. So at the end of the year, you don't have to, try to navigate what's personal, what's business. You have every single business expense on that credit card. My other thing too, and I would say regardless of tax season or not, regardless of whether you're a business owner or not, is again knowing your numbers, knowing what's coming in, knowing what's coming out, whether that's a spreadsheet or something else. So okay, I made this amount of interest in my high yield savings account this year. I invested this amount of money in my Roth IRA. So you have all of that set up, so you can go in and just present that to either your tax provider or that software.
How can our viewers follow your journey, Tori, and your input?
I really appreciate it. Her First 100K is the name of my company, HERFIRST 100K, and Financial Feminist is my book and podcast.
Tori, such a pleasure. Thank you so much for joining. Such a great
Thank you.
conversation as well. That's Tori Dunlap, founder and CEO of her first 100K. All right, well, in some other news that we're following here, artificial intelligence continues to be at the forefront of the technology sector. And Trinity Chavez recently spoke with executives from IT and security data platform Cribble. Let's take a look.
Hey there, I'm Trinity Chavez, and welcome back to another special edition of Taking Stock in collaboration with SiliconANGLE's theCUBE, where we offer exclusive insights from some of the industry's leading experts and innovators in the AI space, all a part of the NYSE Wired community. Today, we are joined by Cribble. We're speaking with the CEO and CMO about some major new announcements. Let's get started. Thank you both for coming to the exchange today to share the major news announcement. Why don't you tell me a little bit more about it?
Yeah, so we just passed 200 million in annual recurring revenue, and I met you last time 15 months ago when we made the first announcement. And so we're super excited. We're growing 70% year over year. And it's just due to the amazing success that we're providing to our customers.
Abby, would you like to add to that?
Such a whirlwind being at Cribble. Like, I'm so proud of us, and to take 4 years to get to 100 million and then start, double it in 14 months is pretty exciting space to be in.
That's hugely significant, especially the time period that it all occurred. So what would you attribute this momentum to, and how do you think they're going to continue to leverage this fundraise?
First of all, back to the customers, it's about the value that we provide to them. It's an underserved segment. It is people who are running the systems that run the business, and the top growing companies in the public markets are growing at 30%. We're growing at 70%, and it is all back on the value that we provide to customers.
Abby, from your vantage point, how are you going to continue this momentum with growing those client relationships as well as enhancing your bottom line?
Well, our number one value at Cribble is to be customers first always, and we're constantly focused on how can we do the next thing that solves the problem that nobody else is solving for them. And so one of the things that I'm really excited about is that when we talk about our solutions and our ability to provide a data engine specific to IT and security, one of the gaps that we had was that we were able to provide analysis, but not in real time. And we have an exciting product announcement coming up that I'm going to let Clint talk about a little bit.
You beat me to the punch. I'm so excited to hear about the new product. Tell me about it, Clint.
This is an add-on to our Lake product called Lakehouse. As Abby mentioned, the biggest gap was I need to be able to ask and answer questions of data that's arriving right now, and I need that to be fast. I need my dashboards to go quickly. I need my alerts to fire really, really quickly. And so with our new offering in Lakehouse, we can start to address all of those workloads. And most importantly, the way that product is priced is significantly more cost-effective than the existing incumbents in the market. Our goal is really to be able to give you twice the data for the same price as everybody else. And we think that this is going to open up a whole wealth of new use cases for our customers for data that they just haven't been able to afford to put into their existing systems.
Well, it sounds like there's a lot to look out for coming from Cribble. Thank you both for joining me on Taking Stock today.
Yeah, thank you, Trinity.
Our thanks again to Trinity Chavez for that interview. And stay with us because we have plenty more on NYSE TV Live after the break.
So you work with many organizations undergoing digital transformation. What role does observability play, and where does Dynatrace fit in?
When you're going through a digital transformation, most likely you're going to change a lot of your digital estates. You're building new applications, you're connecting maybe a new mobile app or a new service to your backend systems, connected to AI systems. So the first thing you need to do where observability helps you is really understand your entire IT estate. What are you running? Which components or which applications are talking to others? What's working, what's not working? Because you're obviously going through this change, you're going to iterate over this environment and keep evolving it. That's one role that observability is playing. And once those services are then live and users are using it, observability helps you to optimize the user experience. I think just 2 days ago, when there was the British Airways outage, how do you feel at an airport if the service is not great? So observability does both. It actually helps you to understand how your system is working and how the individual pieces play together. And it also helps you to understand how users feel about your service, whether it's working for them. And then finally, if something goes wrong, and every now and then obviously something does actually go wrong, it helps you to find the issue quite quickly and helps you to also to resolve the root cause, so what the actual problem might be. Because as you can imagine, in complex landscapes, there's thousands, even millions of components, and observability and Dynatrace also helps you to pinpoint exactly where the problem is.
Now, Dynatrace has been working with AI for more than a decade. As the discussion regarding the cost of generative AI investments and ROI heats up, tell me, how is Dynatrace helping organizations to get the most value out of AI?
So we have a dedicated solution that we call AI observability. So we just talked about observability. Now we're extending it just to the realm of AI, so helping understand how much.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. Well, we do see stocks rising on this final trading day of January today. The Dow and the S&P looking at single-digit gains here on the month of January, despite some of the choppiness. There's a live look at the Dow today. It's up 0.1%, or about 40 points. Our Judy Shaw recently visited NYSE-listed SL Green Realty's Summit One Vanderbilt, which is looking to bring the idea of a New York City observation deck to brand new heights. Let's take a look.
Today we're taking you behind the scenes of Summit One Vanderbilt. This extraordinary destination offers stunning views and immersive experiences, providing a truly unique perspective on a city that never sleeps. That was the most incredible elevator ride I've ever experienced.
Yes.
How long did it take us to get up here?
35 seconds to go from the ground floor all the way up to the 91st floor. It's pretty incredible.
Pretty incredible, and the experience starts the moment you step into the elevator.
Absolutely. We take you from one room and one experience to another to help transition you. And right now in the Hall of Light, we're about ready to go into Transcendence. You ready to go in?
I'm ready.
Perfect. Let's do this.
Wow, this room is amazing.
Wow is right. We are in Transcendence. We are on the 91st floor here in One Vanderbilt, and this room truly is spectacular. It's probably one of the most Instagram locations in the entire world. We are in probably the most famous and most sought after room in all of Summit. We're in Affinity. And what this really speaks to is Kenzo's vision of play. By no means is One Vanderbilt or Summit an area of being passive. We encourage you, we want you to be part of the installation. Here, you become actually involved within the installation of the space. Obviously from the balloons themselves, people that come into this space are able to make it their own. They were able to come through and actually see the world in a much different component. They really are. It's a unique view that you're not going to get anywhere else in the world. I would even encourage you, quite frankly, to help come through with me. So we have people who come here who automatically know where they want to stand, what they want to wear, and quite frankly, the type of picture they want to take, because they know it's going to be shared all across the world. And that's the most amazing thing here. People are evangelizing the product for us. They're evangelizing the Summit brand. And in doing so, that's really the most important thing. It's authentic, it's genuine, but most importantly, it's fun. Welcome to Levitation. This is another opportunity to see New York like you've never seen it before. So come on out.
Okay,
we're going to stand.
Wait, before I stand out there, tell me what we're looking at.
We're looking 1,000 feet straight down right over Madison Avenue.
I don't know that I can stand out
You
there,
can do
Michael.
it. I promise you. I promise you can do
Okay.
it. I got you. So not only is this incredible looking out, but you do have to look down with me. Come on, you could do it.
I am afraid of heights.
It gives you this rush of adrenaline, but it also gives you the sense of boldness and life. And you know what? You did a great job. I'm proud of you. Fantastic. We are now up on the 92nd floor, what we refer to as Transcendence 2. You get a chance to actually watch other people come into the space for the first time, watch their reaction, watch their expression, and quite frankly, watch their awe moment as they're first coming into the Transcendence, because it really is something that takes your breath away. So to be able to watch that experience, there is this unique sense of watching other people and their joy when they first come in. The other aspect that's really unique up here is when you look down into the space, at any given time, conservatively, I would tell you there's more than at least 20 or so different cultures and languages that are being spoken in the room. It's something that speaks about happiness, and that's what Summit does. It brings people together and makes them happy. We're not even 3 years old, and we've already had 5.5 million people come through, and we consider that only the beginning.
Now we're in the gift shop.
We are.
But this doesn't seem like your typical gift shop.
Just like everything else with Summit, nothing we do is typical. We look at as our merchandise in our retail area as a further extension of our brand. Even when you look at the stuff that we have in here, it's about reflectivity, it's about art, it's about creativity.
Kenzo Digital, an artist known for creating mind-bending and emotionally powerful stories in physical space, is behind the experience called AIR at Summit One Vanderbilt.
AIR is an experiential format for a linear story where I think of every guest who comes as the protagonist. So every time you come, you're the protagonist of a story, and every time you visit, that story is different. The core idea is I want to create essentially a piece of art that represents the kind of life force and vitality of the city. And I wanted to find and create a piece of art that I felt could really add value to the lives of New Yorkers, something that could really give back, comes from a real spirit of generosity and giving. And I wanted to find a way to allow New Yorkers to kind of transcend their daily life, to reconnect with nature, to reconnect with other people.
Summit One Vanderbilt is not just an experience. It's part of SL Green's larger vision that includes premium office space and one of the world's most sought-after addresses.
SL Green and New York City are inextricably linked, and everybody looks at us as the largest owner of commercial office assets in Manhattan, and that's true. But what we try to do is impact the city in an unbelievably positive way, blurring the lines between what's public and what's private. And I think One Vanderbilt as a project really expresses that, and it brings an accessibility to the public to what is really the best part of this building, the top of the building, which could have been anything. It could have been a master of the universe office space, but instead it's there for tourists and residents to come see and feel and experience really the city in a way that is unachievable in any other location. What we're doing here is going to last hundreds or thousands of years, so you better get it right.
And that's it for this episode of NYSE Floor Talk Iconic NYC. If you haven't visited yet, it's time to add Summit One Vanderbilt to your list of must-see locations in New York City.
That was pretty cool, and our thanks to Judy Shaw for that exclusive look. Now we want to turn our attention to an ongoing story that we have been covering to show support. Last night, pop stars, rock stars, first responders, and those impacted by this year's wildfires in Southern California came together for Fire Aid. It was a huge benefit concert Thursday that included spectacular performances and moving stories. Nirvana reunited in a surprise performance, and Lady Gaga closed the event with a new song on the piano that she said she wrote. It's called Time is a Healer. Well, U2 offered the first big donation of the night at $1 million, and we will continue to be thinking of and, of course, supporting those impacted throughout this month. All right, well, as we look to wrap up today's show, we do see that stocks are in the green, rounding out the month of January. The Dow up a little more than 5.5% on the month, higher on the week as well. Better than expected earnings, of course, fueling the gains. And next week, we have more earnings on top. In fact, from more technology companies like Amazon and Alphabet. We also have a whole host of jobs data that we'll be covering, of course, for our viewers wall to wall. No shortage of news to cover, and as our guests have said, might be a little bit choppy this year, but by and large, it is moving higher. That's going to do it for today's show. Everyone, have a wonderful weekend, and we will see you back here at 9 a.m. Eastern on Monday morning. At the New York Stock Exchange, I'm Kristen Scholler.
for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.